startupweb.com, and today I would like to talk to you about something I've seen lately trending, which is investor crowdfunding. Now, I'm the first person to come out and say this. I'm against this trend, and I'll tell you why. Because it's geared toward people that are considered middle market, meaning that they have surplus income to invest, but they are not professional investors. For example, people employed by private equity firms or venture capitalists or people working in that sector of high finance. So it's geared towards and targeting the middle market, and I think that with investment crowdfunding or investor crowdfunding, whichever term people want to use for it, what's going to happen is that a lot of people within that finance bracket who are above middle income and do have the surplus income and are looking to build upon that income with new business ventures and new opportunities, I think that those people are in a vulnerable position of getting swindled out of their money, especially since they're not going to properly vet these different ventures beforehand the way that a private equities firm or a venture capitalist would. So I think that they will get in over their heads pretty quickly. Of course, unless they have a background in finance or some really good advisors on board. That's not to say that all of these type of ventures are going to be schemes. I'm not saying that. I'm just saying there's already so much deception involved with crowdfunding that taking it to this next level of investor crowdfunding just ups the money that's up for grabs to be taken by people that are running phony and fraudulent startup schemes and investment scams, pyramid schemes, and similar things like that. So I would advise you to be very cautious of investment or investor crowdfunding. I do see why people are saying that it's a good opportunity. More people can get involved with the startup at a more early age and move forward with it from there as it progresses, get in on the ground floor, so to speak. But people can already do that with the crowdfunding that's in place, or by participating in helping to launch a local small business. So I would suggest people start on that level if they're planning on investing in any sort of business venture. If you're starting with a smaller amount of capital, look at your local businesses, see who's in need, see who's starting what. Because that way you have an advantage as well of being in close proximity to the business that you're investing in. Learn from my mistake. My one investment failure greatly resulted in two things. One was that I was not in close proximity to the location of that startup venture. Had I been, I would have pulled out much sooner. Number two, when you're getting involved with the young business people, it's much harder to vet them unless they happen to have a big business background, which some young people do. I have from a very young age, but many of them don't. So they're not going to have the collateral, the assets, the experience to really guarantee you any sort of return on your investment. So location and age and experience of people running the show are very important things to keep in mind. That said, if you do feel that investment crowdfunding is right for you, or if you're currently in the middle of that in any capacity, either as a business founder or as a participant, we would love to hear your story of how it's going at startupweb.com. Because good, bad, or otherwise, we're here to help you.